Hello traders and welcome to the channel once again. This is our fourth lesson on our market strategies trading series. Please, if you haven't watched the first, second and third part, please ensure that you go back and you watch those lessons so that you are going to understand the lessons properly. In today's lesson, we are going to be talking about structural events. Now, when you talk about structural event, this simply means the occurrences that happens on the market as a result of what price movement. In this particular video or in this lesson, we are going to focus on three important structural events, which is mostly known by most traders, but maybe you don't have proper understanding of them. So the first one that we are going to be talking about is what? The break of what? Structure. And the next one will also be a change of what? Character. And the last one will be a shift of market what? Market structure. So let's take the first one, which is what? A break of structure. Break of structure. And let's explain it. So when you talk about what a break of structure, it simply means this occurs when market what breaks a previous high or low of what of a market. So we have two types of it. We have the bullish break of what structure. We have a bullish what break of structure, which is when market what breaks what a swing high, and also we have a bearish break of what structure, which is also when market breaks what a swing low. Now, a break of structure has what importance that you need to understand. It confirms or it shows what a continuation of what market direction. It shows what a continuation of what market direction, and also indicate what momentum of what the direction of what of the market. So if market is going downwards and we see market what breaking the low of that means what the direction of the market is going to what it is going to continue. So we may see a retracement, then maybe another what break of what structure. So a continuous break of structure simply means the direction of the market is what active, and also the momentum is what very strong. That is it about what a break of structure. Also, we have the next one, which is what a shift in market structure. Now, when you take a shift in market structure, a shift in market structure also indicates what a potential reversal of market what direction. So this indicates a potential reversal, but do not confirm what do not give what a valid confirmation of market direction what changes. It is the early sign that the direction of the market will be what changing or may what change. So if we are having what a market, let's say a bearish market that is what going downwards, and at a certain point maybe we are not seeing a clearer what markets a clearer direction of the market, or market is unable to break what the low, the previous low, but then we see a break of what the previous high like this indicates, or this give us what, a clue that the direction of the market might may or may want what to change, but the direction, or we haven't gotten a confirmation yet that the direction is what is going to change. So this is what an early sign or an early indication that the direction might of the market might want to change. So the next one that we have, or the third one, which is what, the change of what, character. The next one we have is what, change of what, a change of character. Also, a change of character also indicates a complete, or a complete change in the direction of what, of the market. So let's say we have bearish market again like this, then we see market, all right, when market breaks a major high, all right, within a change of character, when market breaks what, a major high, when market breaks what, a major high, when market breaks a major high like this, that means that market is what, changing its direction from what, a bearish market to a bullish market. So you need to understand them what, properly when they are happening, or when you see them what, on the market. So from our previous what, lesson, we talked about the three types of what, markets. We talked about what, three types of market, which we talked about the major structures, the minor, the major structures, the external structures, and the internal structures. So we are going to apply, or you will be applying the structural event according to what, each structure, so that you can understand it what, properly. Now, when it comes to market structure, there are three important things that you need to what, take note of. First is what, direction, or the trend of what, of the market, the direction of the market. Also, we have liquidities. We have what, liquidities, and also we have entry. So these three types of market structures helps us to what, identify these things what, properly. Now, when we take major structures, when you take major structures, now a major high, or a break of structure of a major high indicates directional what, continuation. Now, when we were discussing the major structures, we said that it is the directional what, engine of the market. So anytime that we see that a major high has been what, has been broken like this, that means that the direction of the market is what, is entered, or market is going to keep moving in that particular what, that particular direction. But before market is going to what, is going to move, before market will move or continue in the direction, there should be a retracement, all right, to a certain level before market what, market move. So with major structures, you need to pay attention to two things. First is what, direction, all right. When market breaks the high, it indicates what, the direction. Also, after market has break the high, you need to find what, your point of what, interest. All right, you need to find the point of what, interest. That is the zone that market will react from before it what, it continues in what, in a direction. So if, let's say, markets comes down to react from your point of interest, then we go up again and we see that market has what? Has broken structure again. As we keep on having continuous break of a major high, it means that the direction is what? Is intact. All right, nothing changes over here. All right, the direction still remains what? Bullish. All you need to keep doing is that you ought to identify your point of interest whereby markets may what? May reverse or react from before the continuation of the market what happens. So that is a break of structure on a major high for you. Now we go on to the next one, which is what? The change of what? Character. We will go on to discuss a change of what? Character. Also, like I said, a change of character is it occurs when market breaks what? A major high, all right, in the opposite what? Direction, in the opposite direction. So let's say we have what? A bullish market like this, high or low, all right. A bullish market going upwards like this, and we see a major low, the major low being broken, all right. As soon as you see what? This major low, the opposite swing of a major structure being broken, this indicates that the direction of the market is going to change or will be changing, because we've had what? A major low being broken. As explained earlier, that the major swing point controls what? The direction of what? Of the market. So when market breaks what? A major low like this, that means the direction of the market what? Is going to be changing. So we might see, or we may see that market will what? We trace backwards to key level or what? A point of interest, then we will see what? We will see a continuation of what? Market in the opposite direction. So if we take what? Market, if we take our major structures, that is how market reacts, or that is how market react with what? Major structures. Sometimes you may have some kind of minor structure formation even from the higher time frame. So for instance, as we have this major as we have this major swing leg, we may see, or maybe you might have maybe a minor a swing formation over there within the swing leg. So when that happens, that is where you have what? Your market structure shift, which is what? An early sign, which becomes what? An early sign that the direction of the market is likely to start what? To start changing, especially when there's what? Market is reacting from what? A key level. All right, when market is reacting for a key level, for example, supply and demand zones, support and resistance what? And resistance what? Zone. But what you need to pay attention to is what? Your highs and lows when market what? Breaks them. All right, that is it about major structures. The next one that we are going to be talking about is that, so major structures what? Indicate, or what? It is the directional what? Engine of what? Of the market. So as we break them, as we keep on breaking them, it shows that the direction is what? Intact. And when it breaks in the opposite direction, it shows that market is what changing direction. So we have the next type of what our structures, which is what our external structures. So if we take our external what structures, all right. So if we are having, or when we have what when we have, or when we have a major structure like this, that market has broken, or when market breaks what a major structure, before market will continue in its direction, it needs to react from what? From a certain level. All right, it could be like this, a zone like this, which is what a breaker block. It could be something like what an order block from what a particular zone. It depends on what the chart would shows you. But before that will happen, the retracement or the correction that will happen, when you go to your lower time frame, we are going to be seeing what structures formation, which is what our external structures before market react to what the higher time frame, what point of what interest. So when we go to, or when you go to what our lower time frame, and we see what the structures, the break of what structure that is happening, although market we are seeing what break of structure from what our external structures, but that break of structure do not controls the direction of what of the market. This break of structures over here do not what controls the direction of the market. It is what a retracement to our major time frame, what point of interest. All right. So what this break of structures can what gives you, is what a counter trade what opportunities. All right. This trade can give you counter trade what opportunity to your major point of what interest. All right. That is a break of structure from what our internal what from our external what structure. And also when markets gets to our what market gets to what our major time frame point of what interest, or higher time frame point of interest, and we see what the first break of external high over there. All right, that shows you, or that tells you that market is about to what move in its actual direction. All right, in its actual what direction, or is about to what the external time frame is about to align with what the major what time frame to move in its what original direction, before maybe we may see another what break of structure from what from here. So a break of structure from on the external time frame can mean what or may mean counter trade what opportunities, or will react to a higher time frame point of interest for market what to play out, or to continue playing what in a direction. So when the external structures react from a higher time frame point of interest, the first break of structure, all right, can be considered as what your market structure shift. All right, can be considered as what a market structure shift, what a potential sign or indication that the direction of the market may be changing. A potential what the sign that the direction of the market may be changing. So as soon as we have our market structure shift, and then we see that there has been a further confirmation of what a further break of what external structures within external structures like this, that is what gives us a more confirmation that the now market is what moving or what following our higher time frame what direction of what of the market. So you need to understand the direction this concept very properly. Sometimes when you are dealing with the external structures, people normally consider it to be what the main trend of what of the market. So for instance, if they are seen or if even if market is reacting from a higher time frame point of interest, you will see them looking for what counter trade because they are having what a break of structure, and maybe market might be reacting from what a point of what interest, so they intend to what continue following what the structures over there. But what the market is actually doing is that this one is what a counter trade or retracement, and once market react from what your higher time frame point of what interest, is that what building upwards, building up to align with what our higher time frame what direction or higher time frame what move. So always our major structures what gives us what the direction of what of the market, and the external structures also give us what counter trade opportunities, because for this particular move to what to happen, sometimes if you are dealing with, let's say, the weekly or daily, it might take about a week or more for market to what react from that zone. And if you might not want to what might not want to sit down and wait till market gets to that particular zone. By following your external structures what pattern, you can be getting what counter trade opportunities until market what react from what that particular zone. All right, until market reacts from what or gets to your higher time frame direction, and you start what following the direction of what your higher time frame. So once market react from what gets to the zone and react from there, we have what our market structure what shift, which is another sign that the direction of the market might be what might be changing. Sometimes too, you can identify them from your higher time frame as what I said. Also, on our lower time frame as well. All right, like I said, there are three things that are important: direction, liquidities. Yes, so when it comes to liquidities, mostly our external structures create what more liquidities on the market. For example, equal highs. All right, equal highs. Equal highs. Also, we have what we have wicks and other stuff. So mostly the external structures keeps what or builds up what liquidity, and once you may see what a break of what external structures, which is what just what it might be what a liquidity sweep that market is what taking. So you need to pay attention to that as well. Also, when we move on to our what internal structures, internal structures, we said that this is what the executioner what engine of what of the market. This is the executioner engine of what of the market. So when we also scale down from our what external structures to our internal structures. What we will be saying is that let's say we have what external structures. This is what our external structures from 4 hour to 15 or 4 hour to what 5 or 15 minutes, and we are getting what our external structures formation within what this particular swing, this particular structures like that. Sorry, it's not really clear, but let's just consider it because we all understand what we are doing. All right, so when we take it as an example and we switch over there, now mostly with the external break-off structures, it's mostly provide us with what executional what opportunities. So let's say we have we have a structure. We are having a structure like this. So with a structure like this, when you go down to um, you go down to your lower time frame, we might see something what like this. So if you understand liquidities and what an inducement, all those concepts very well, we will be explaining that in some of our subsequent what lessons. All right, it provides you with what executional what opportunities, executional what opportunity. So when market breaks what this internal structure from here, all right, what it does is that you may see a pullback, then another form of what maybe a structure like this before you see before you see market what getting down or going, reacting from what taking down your external low like this, we might see a several break of what market structure within what your internal structures. All right, within your internal structures like that over there before we see that the external structure has been what has been broken. So within this external structures formation, you can continuously be getting what executional opportunities once there is what a break of structure, because once there is a break of structure, you know that the direction of the market, we say that a break of structure what shows continuation of what the direction of the market. But once market is reacting from a higher time frame point of interest, all right, you need to understand whether it's a counter trend that you are trading against, or you are trading according to the higher time frame what higher time frame direction. So if it is a counter trade opportunity, all right, you might get about what several entries from what your internal structures. But once market reacts to your higher time frame point of interest, higher time frame what point of interest, and then we see that we get our what first break of break of what this break of what the opposite what swing point, first break of what the opposite what swing point from our what external internal structures as well. That is also an indication of what a potential change in market direction. So if market is reacting from a point of interest, that means a higher time frame point of interest, that means the direction might probably be changing. So when we scale down to our lower time frame, for example, 15 minutes, and we see that market has what? Giving us a shift in market structure like this. All right, we're having what? As you can see, we're having a break of structure. We're having what? Break of structure like this. We're having a break of structure, a break of what? Structure. We're having a break of what? Structure again. Then once we react from the higher time frame point of what? Interest, or either a point of interest from what? Our external structure. Once market gets over there, we see a change in what? A change, or we see what? Market, a break of what? The previous swing point like this. That means we have what? Our shift in market, what? Market structure. Now let's go back over here. Why is this not what? Why is this swing, this break of swing high not a market structure shift? Because market is not reacting from any point, higher time frame point of what? Point of interest. This is something that you need to what? Take note from. If you are working on your external, or if you are working with what? Your external structures, and you have your external a point of interest from what? Your external structure. You have what? A point of interest. So let's say this is what? A 4-hour what? 4-hour time frame or 1-hour time frame. So over here, we are looking at market what? Coming down to what? This particular zone. All right, this particular zone, so that we will take our trade from there. Once market gets to this zone, or when we go to your lower time frame, let's say 15 minutes, you will be seeing what? A continuous structures formation like this. But once market gets to the zone, and we see that there have been what? A break of what? The previous high, or the opposite what? Structure. That means a shift in market structure has what? Has occurred. But if we are having it, if we see something like this, and let's say market what? Pulls up, this isn't a shift of market structure. This is what? A liquidity sweep. So if market is reacting from a point of what? Interest, or a key level, all right, that is where we have what? Our shift in market, what? Market structure. It could be an order block, a breaker block, or anything. All right, once market is reacting from there, that means we are having what? Our first indication that the direction might be what? Might be changing. So if we get a further confirmation, or a further break of structure from here, all right, then we can see that now the lower time frame is what? Aligning with what? Our higher time frame. Please, if this video is helping you to understand market structures properly, kindly ensure that you like this particular video. Also subscribe to the channel, so that, and click on your notification icon, so that anytime that we post a video, you are going to what? Get a notification as well. Also drop your comment in the comment box if you don't understand anything, or any feedback that you have concerning the lesson. Please ensure that you drop it what? In the comment, and we are going to what? Respond to you. So that is it. So we need to pay attention to the zones that market is what? Reacting from. So a break of structure, as we have discussed, simply indicates what? The direction of the market. But sometimes we confuse ourselves with the market structure shift and the change of what? Character. Personally, I would advise that change of character, you pay attention to your major what? Structures. your major structures. Once you see that a major high or low has been broken in the opposite direction, that means you know that the trend of the market has changed. So as soon as you get to know that the trend of market has changed, now you start to align yourself according to the market direction. So let's go on to the chart and let's see how we can apply or how we can combine all these concepts that we've discussed on the live market. So I'm having a chart over here. Let me just use a clear chart. So if we take this market over here, for example, now we are on our daily time frame. All right, we are on our daily time frame. So if we are marking our daily highs and lows or major swing point, we have our major swing points, our major swing point. We had a minor swing over here. So this is our major swing point from here. So over here we can have I would personally consider this one as I'll consider this one as a market structure shift, because the swing wasn't that high or really extreme. All right, when I'm dealing with major structures, I like to consider extreme swing. So major. So over here we saw a major structure or opposite swing being broken. So this is a confirmed change of character. So we know that this market is changing from bearish market to a bullish market. Also we had an early indication that this market might be changing direction, and now we have gotten our change of character confirming. So now, as I said, the next thing that you look for from your higher time frame is your point of interest. All right, and with a point of interest, we have order blocks, breaker blocks. If you don't understand how to pick them, we are going to have a lesson on those zones as well. So we look for our point of interest, and we have an order block over here. All right, so now we have our we have our major structures analysis complete. So we move on to our 4-hour time frame, and as I was saying, before market will come to this zone, all right, when you go to your 4-hour time frame, you are going to see substructures formation. Markets wouldn't just come down to the zone. There will be substructures formation. For example, all right, so this is it. This is so this becomes our external structures formation. So whilst we are waiting for markets to get to our extreme point of interest, we can also take advantage of our our external structures to have counter trade opportunity. But all that we need to understand is that this isn't the main direction of the market, because we have a change of character over here. So normally the mistake that you might see traders will be doing is that because market is reacting from a zone like this, all right, let's say this might be or this might be considered as what, either a supply zone or whatever that we might call it. And then we've seen that there has been what, a break of structure. Let's even consider this one. All right, so you might see that someone might be or traders sometimes mark this zone as what, their change of what, character, and then you have this what, order block over here. It's a perfect analysis, but what you need to understand is that this is not the overall direction of the market. All that you are what they are looking for is market to get to your point of what, interest, your higher time frame point of what, point of interest. So over here, from our external structures, we have our what, our point of interest. If you go to we'll go to the lower time frame as well. Then we are what, targeting our point of interest like this. Now we see a break of structure from the external what, zones. All right, so you just look for another point of interest. Why? Because market hasn't, all right, market almost reacted from what, the point of interest. So with this particular one, you might choose to what, ignore and just look for opportunities to align with what, the higher time frame point of interest. But you can then also, so this is where sometimes the traders normally get it wrong, because markets just return back to the zone. You try to take another what, another trade, and maybe even target more than that particular your POI or your higher time frame point of what, interest, because you have what, you are having a break of structure what, over here. But what you are not seeing over here is that markets has what, has reacted to your higher time frame point of what, interest. We have a change of character over here, which means that the actual direction of the market is bullish. Is bullish. So we need what, a confirmation that what, we need a further confirmation of market that our bullish bias is going to what, is going to work. All right, so you are seeing market what, as you can see, when market gets to this particular point, we are having what, an accumulation. It started what, accumulating. So if we decide to continue our what, our sell bias over here, because we are having an order block over here, we are also missing out because market is reacting from what, our higher time frame point of interest. And as explained, that the higher time frame is the main what, is the directional what, engine of what, of the market. We had a bearish market all the way coming downwards. Then we saw this heavy impulsive what, move. All right, we have this strong what, impulsive move. So the probability that market what, might be changing direction to a bullish market is what, is very, very what, high. So although we are having a break of structure, we are reacting to what, we are reacting to a higher time frame point of what, point of interest. So now, as we are seeing this point of interest or reaction from here, let's go down to lower time frame, 15 minutes or maybe, yes. So when we go down to our what, our 50 minutes, if you go down to our 15 minutes, what are we seeing, or what are we seeing from what? What are we seeing from what? Our internal what structures, which give us what? More executional what opportunities. So we see that we have what? This swing over here being what? Taken out. And also we are reacting from what? A higher time frame point of interest. So this becomes what? Our market structure what? Shift. We had what? A swing low being broken, and then after our market structure shift, we are having what? A break of structure, and we say that a break of structure what? Indicates direction continuation. So we now have an order block from here. So we might see that this market may either what? May go in what? In our direction. So when it comes to the structural what event, you need to understand it in you need to understand it in relation to the direction of the market, which kind of structure controls market what direction. All right, if whether is this a counter trade against the original direction, if market is giving you a counter trade, all right, so that you don't, is market also reacting from what a point of what interest, so that you don't always be mistaken when you are trading. Please, if you are finding what value from this particular lesson, kindly ensure that you subscribe to the channel. Also click on what? Like, and also share button. Also drop your comment. The comment are very what important for me. I need to understand that you grab the concept that we are what explaining. If you have any question, you drop it and we are going to what respond to you. So that is it when it comes to what the structure what event. Let's add another example. Let's see if we can have another example. For GBP. All right, so this was also GBP USD. So we go to our higher time frame and we indicate what our higher time frame what swing point. So we had market reacting from what strong point of what interest. So in supply and demand, we have something called hidden supply and demand. That is why we are seeing a reaction or rejection from here. So if we are to mark, or if we to check our structures properly, we had what? We have high, low. All right, so that is it with our what major swing point on this particular what chart. Then we saw what an MSS, which is market structure shift, and then we had what? A change of what? Character. All right, we have a change of character. So now we indicate our what? Our point of what? Interest. So if I am indicating point of interest is from here. All right, we have this zone, which was our extreme, and also we had another block around this what area as well. So now when we go to our lower time frame, so this was our market structure shift. We know that the direction or the current direction is what is bullish. We know that the current direction is what is bullish, and we have what here. This was and we had change of character from here. So we had market reacting from what this point. So if we considered our, if we had to consider our what external structures, we have first this one MS market structure shift, and we are having what another block over here. So a break of structure. Then we had this zone that market what reacted from, whether it's another block, it could be another block as well. All right, so always we pay attention to the structures as well. If we were taking this one, the retracement wasn't what really deep. All right, it is not always that market will give you that kind of what deep retracement. All right, so all that we are going to be doing is that we are going to be following the structures or we are going to follow the direction of the market. So maybe from here we will have this external structure being broken. You have this external structure being broken. You have this external structure being broken, then maybe a continuation. So with that, we will just indicate our point of interest. Then when we go to our 15 minutes, we will look for what our market structure shift as an early confirmation, right? Something like that. So when you see the high being taken, giving you a market structure shift, that means market is ready towards play along the higher time frame market direction. Please, if you find this video helpful, kindly subscribe to the channel, click on your notification icon, like this video, share to other traders to also have or benefit from this particular lesson as well. You can as well join our Telegram community. We provide free technical analysis on that on our channel, so that you will have a firm understanding of everything that we have discussed. This is the last part of our market structures mastery series, and I believe that this lesson is going to help you improve your trading skills properly. Thank you for watching, and see you in our next lesson. We are going to have more series on different kind of trading strategies. So ensure you subscribe to the channel.